Gold has recently surged to a new all-time high, breaking previous records and capturing the attention of investors worldwide. This milestone reflects a variety of economic factors, including ongoing inflation concerns, geopolitical tensions, and shifts in monetary policies.
Firstly, thank you for watching, and don't forget to smash that like, subscribe, and notification bell for more global finance uncovered, as we continue to work hard and around the clock to always deliver and improve on our content for you. We would greatly appreciate your additional support by you clicking the like button, notification bell, and subscribe button and joining our channel's growth.
As global uncertainty continues to rise, many investors have turned to gold as a safe haven, pushing its price to unprecedented levels. The surge in gold prices can be largely attributed to the weakening US dollar, which traditionally moves inversely to gold. As the dollar depreciates, gold becomes more attractive to investors holding other currencies, thereby increasing demand. Additionally, the Federal Reserve's cautious approach to interest rate hikes has added fuel to gold's upward trajectory, as lower interest rates reduce the opportunity cost of holding non-yielding assets like gold. Inflation fears have also played a significant role in gold's recent rally. With inflation rates climbing in many major economies, including the US, investors are seeking assets that can preserve their purchasing power. Gold, historically seen as a hedge against inflation, has naturally benefited from these concerns. The combination of rising consumer prices and uncertain economic growth has created a perfect storm for gold to reach new heights. Geopolitical tensions, particularly those involving major powers such as the US, China, and Russia, have further driven the demand for gold. The ongoing conflicts and trade disputes have led to increased market volatility, prompting investors to seek out stable assets. Gold's long-standing reputation as a safe haven during times of crisis has made it an attractive option in the current geopolitical climate. Central banks around the world have also been increasing their gold reserves, contributing to the metal's record-breaking performance. Countries such as China and Russia have been diversifying away from the US dollar, opting to bolster their gold holdings instead. This trend has added additional upward pressure on gold prices as central banks' demand further tightens supply in the market. The record-breaking gold prices have also had significant implications for the mining industry. Companies involved in gold extraction and production have seen their stock prices soar as profit margins increase. However, these gains are tempered by the rising costs of production and potential environmental and regulatory challenges. Nevertheless, the overall outlook for the industry remains positive as long as gold prices continue to climb. Investors are now closely watching how gold will perform in the coming months, especially in light of potential changes in U.S. monetary policy. While some analysts believe that gold could continue its upward trajectory, others caution that a stronger dollar or a more aggressive stance from the Federal Reserve could lead to a correction. The market remains highly sensitive to economic data and policy announcements, making gold's future direction uncertain. The impact of record gold prices is not confined to the financial markets alone. Higher gold prices are likely to influence consumer behavior, particularly in markets where gold is a popular commodity, such as India and China. Increased prices may dampen consumer demand for gold jewelry and other gold-related products, potentially leading to a shift in purchasing patterns. Gold's new record has also sparked discussions about its role in the modern financial system. As digital currencies and other alternative assets gain popularity, some question whether gold will maintain its status as the ultimate safe haven. However, gold's historical significance and tangible nature continue to make it a preferred choice for many investors during times of uncertainty. Gold reaching a new record high is a reflection of the complex interplay between economic, geopolitical, and market factors. As global uncertainty persists, the allure of gold as a safe haven remains strong, driving demand and pushing prices to unprecedented levels. Investors, central banks, and consumers alike are all feeling the effects of this historic moment, which could have lasting implications for the global economy. Gold's historic rise to new record levels has profound implications for both global economies and individual investors. The increasing price of gold is not just a reflection of market trends, but also an indicator of broader economic anxieties. When gold hits such unprecedented levels, it signals to many that the traditional financial systems are facing significant stress, prompting a shift towards assets considered safer and more reliable. One of the critical drivers behind the surge in gold prices is the persistent fear of recession in major economies, particularly in the United States and Europe. The recent economic data has painted a mixed picture, with some signs of resilience but also underlying weaknesses that could potentially lead to a downturn. In such an uncertain environment, gold's appeal as a hedge against economic instability becomes even more pronounced. In addition to economic concerns, gold's rise is also tied to the uncertainty surrounding global trade. The ongoing trade tensions between the U.S. and China, as well as other geopolitical issues, have increased market volatility. Investors, wary of potential disruptions to the global supply chain and the impact on global growth, have sought refuge in gold, pushing its price even higher. The influence of central banks cannot be overstated in the current gold market. With many central banks, particularly those in emerging markets, increasing their gold reserves, the demand for gold has seen a steady uptick. This accumulation is often viewed as a move to diversify away from the US dollar, signaling a shift in global financial power dynamics and further adding to the demand pressure on gold. Moreover, the global debt levels have reached unprecedented heights, making many investors nervous about the stability of the current financial system. The sheer volume of debt, both public and private, raises concerns about the sustainability of economic growth and the potential for future financial crises. In such a scenario, gold's role as a store of value and a hedge against systemic risk becomes even more vital. The impact of these record gold prices is also felt in the currency markets. A strong gold price often correlates with a weaker US dollar, as seen in the current environment. This inverse relationship highlights gold's role in the broader financial ecosystem, where it acts as a counterbalance to fluctuations in currency values. As the dollar weakens, it makes gold more affordable for foreign investors, thus fueling further demand. Gold's surge has also led to renewed interest in gold-related financial products such as exchange-traded funds, ETFs, and mutual funds. These instruments provide a more accessible way for investors to gain exposure to gold without the need to purchase physical gold. The increasing popularity of these products indicates a growing recognition of gold's value in a diversified investment portfolio, especially during turbulent times. In emerging markets, where gold has a cultural and economic significance, the rising prices are being watched closely. In countries like India, gold is not just an investment but a key part of social and cultural practices. However, as prices soar, the affordability of gold for everyday consumers comes into question. This could potentially lead to changes in buying behavior, with consumers opting for lower quantities or alternative assets. The mining industry is another sector significantly impacted by record gold prices. Mining companies are seeing increased revenues, but the pressure to maintain production levels is mounting. Higher gold prices might incentivize increased exploration and production, but it also brings challenges such as the rising costs of extraction and environmental scrutiny. The industry's response to these pressures will shape the future supply dynamics of gold. Sustainable and ethical gold mining is becoming a more prominent issue as gold prices rise. With greater profits on the line, there is concern that some mining operations may overlook environmental and ethical standards in the pursuit of gold. This has led to increased calls for transparency and responsible sourcing in the industry, as consumers and investors alike become more conscious of the origins of their gold. The implications of gold's new record go beyond financial markets and touch upon broader societal issues. The wealth disparity could widen as those with significant gold holdings see their wealth increase, while those without are left more vulnerable to economic downturns. This could lead to increased social tensions, particularly in countries where wealth inequality is already a pressing concern. Furthermore, the environmental impact of gold mining, particularly in regions with lax regulations, could become a more significant issue as demand grows. The extraction of gold is a resource-intensive process, often leading to deforestation, water pollution, and other environmental harms. As gold prices rise, the potential for environmental degradation also increases, prompting calls for more sustainable mining practices. From a macroeconomic perspective, the rising price of gold may influence central bank policies. As inflation concerns persist and gold continues to rise, central banks might reconsider their approaches to interest rates and monetary policy. A more hawkish stance could be taken to curb inflationary pressures, but this could also slow economic growth, creating a delicate balancing act for policymakers. Investor sentiment is likely to remain a crucial factor in gold's future trajectory. If the current economic uncertainties persist or worsen, we could see gold prices continue to climb. However, if there's a resolution to some of the global challenges, such as a decline in inflation or a reduction in geopolitical tensions, gold might face downward pressure as investors shift back to riskier assets. Finally, gold's new record has led to a re-evaluation of its role in the modern investment landscape. As digital currencies and other alternative assets rise in popularity, gold remains a tangible, time-tested store of value. Its ability to act as a hedge against a range of economic risks ensures that it will continue to play a significant role in portfolios around the world, regardless of how financial markets evolve. In conclusion, gold's ascent to new record levels is a multifaceted phenomenon driven by a complex interplay of economic, geopolitical, and market forces. Its impact is being felt across industries, from mining to finance, and its implications stretch far beyond the immediate gains for investors. As the global economy navigates uncertain waters, gold's role as a safe haven is reaffirmed, offering stability in a world of growing instability.
Thank you for watching, and don't forget to smash that subscribe, like, and notification bell for more global finance uncovered.